Good morning, good afternoon, good evening, folks. Michael Zuper, one rental at a time, back with what we call the three amigos. Matt, how are you?
I'm doing super awesome. Excited that you're back.
Thank you, buddy. I appreciate it. I missed you guys. I really did. I'm glad we still text each other and all that, but yeah, I missed you guys. Dion, how are you?
I felt like I was like, I don't want to, like, I kind of want to bother him. Like he's
Oh.
finally away. He's finally away from the desk. So when you would post something, I was like, I'm all over it.
Oh, I'm in. Dion, how are you?
Howdy, I'm doing great. That was the same thing. I tried not to hit the group text too much while you were on.
Do me a favor. Next time I'm gone, hit the group text as often as I can, because I appreciate the little dopamine hit. I want to hear from you guys. So yeah. I promise you, if I don't want to reply, I won't reply. I promise.
I've seen that too.
Yeah, exactly. I'm done. I'm out.
Maybe you'll reply in the right group text, though.
Yeah.
I don't know if you noticed that or not.
I did.
I did.
Yeah.
It was awesome.
Okay.
Just bad. Oh, well. What I want to do here is I want to talk about interest rates.
Yeah.
And really this conversation is going to be for kind of the new investors, right? The folks following the crash channels, the folks not doing the work, the folks in the parking lot versus the stands. The three of us are on the field. We have now attracted a great group of folks that are in the stands, but there's still these knuckleheads out in the parking lot. So one of the things I think I said last week or the week before is I now believe that the 10% 30-year mortgage is off the table, right? There was a time where I'm like, maybe, right? We might get there, right? It was, the margin was expanding seemingly every day. The Fed was talking tough. I now, frankly, don't see it. I don't see 10% 30-year mortgage in the next year. I could be wrong. And let's pretend I am wrong. Let's say sometime between, November and December next year, the 30-year mortgage rate, owner-occ, best credit, full down payment, full doc, hits 10%. What do you guys think happens in that market? We'll go to you first, Dion.
I think we see more crash videos from people who can't follow logic. So this time last year, interest rates, 3. And just before November, a friend closed on her duplex at a 3.1% interest rate. Maybe
investor loan.
Investor loan was 3.1. She was house hacking, so 2.8, right?
Oh, okay, wow.
So great loan, right? So interest rates have doubled. We're in the 6s now, even though they've come down a little bit since last month. They've doubled. So 3 to 6, we've gone up 300 basis points. That means prices have to have come down 30%, according to all the math of all the crash videos. 1% up means 10% down.
Yep.
And you pointed out that month over month we went up 0.1%, but we're up. You also pointed out in your update this morning, 11% year over year. So how can interest rates go up 300 basis points and prices go up 11% year over year? So if we get to 10, transactions crash again, like you further crash. But that doesn't mean prices come down. So anybody waiting for prices to come down because interest rates go up is doing their. If you fail to study history, you will repeat it. The people who won out bought early in the 70s because as interest rates doubled, prices tripled. As interest rates double again, prices will go up.
Yeah. Yeah. How about you, Matt? When you think about, you've done a lot of loans in the last, I don't know, couple of years, right? Certainly the last 18 months.
17.
Yeah, it's only 17. So let's pretend for a moment, an owner-occ deal is 10%, which probably means investors are 11 or 11 and a half. What do you think happens in housing? Just explodes, or what's going on?
If I can find a deal that works with a 10% mortgage, I buy every one of those I possibly can. Because there is no way in 5 years that the rate's 10%. There's no way. And so what I look at is I look at it creating opportunity. I think that the crash videos get, even more absurd, more ridiculous. We have more renters that start YouTube channels because they feel like they know what's going to actually happen. I mean, honest to God.
We all know who you're talking about.
Honest to God, like, if you're a renter and you've rented for a number of years, you just start a YouTube channel and you talk about real estate. Like, why not? Like, you're qualified, and at the end of the day, rates are not going to get to 10 anymore. And the reason that so if they did, it would create a phenomenal opportunity because if you find a deal that cash flows at 10, you are likely in a deal that will cash flow for the rest of eternity, because the rates will not stay at 10. That will lead to the worst demand destruction we've ever seen. That will lead to deflation. That will lead to everything. Finally, that will be more than the breaking point. That's why I don't think we get there. But let's say we did, that will start really an even worse cascade. And everyone's going to be like, see, all these renters are out there. They're all right. All you landlords are idiots. Yeah. 20% unemployment. If that goes there, I still make my nut. I'm good.
Yeah. So when I think about 10% mortgage rates, and I actually thought a lot about this like a month or 6 weeks ago, because we were on a trajectory where for the first time in my life, I'm like, damn, that's possible, right? Not probable, but possible.
Yeah, I agree with you. So,
I think Dion's absolutely right. So we on this channel, we've been talking about transactions crashing 40 to 50%. We were ahead of that. We were right. We get to 10%. Owner occupant purchases almost vanish.
Yeah. Oh, absolutely.
Right. We see crazy demand destruction.
They get a case of the Pukies at 7.
Yeah, we've already seen it. It's proven. Right.
I mean, and you're going to add 3 more on top of that. Oh dear Lord, the number of snowflakes melting across the country.
Yeah. So again, we get to 10% owner ox. You'll still do some because some people pay cash and they don't really care about rates, and there'll be some of that, but not a lot. Investors, to your point, Matt, I keep telling people, it blows their mind. I don't give a rat's ass what the cost of capital is. I put it in the spreadsheet. If the yield works, the yield works. And to your point, which I thought was great, I hadn't even thought about. If I can get a deal that works at 10, cash flow day one, 30-year fixed rate debt, I sit on that and just wait, because at some point we're going to get back to 6%. I'll refi and get those 4 points lower on my payment. I win again.
Yeah. And rents, if they follow the 114-year history, have gone up 4 more years or 5 more years till you hit that 6 number. Yeah. But I think the higher that it goes, the more aggressive the downward path is going to be. Right.
Oh, yeah. They'll be cutting a full point.
Exactly. Yeah.
So. Yep. So I think that's awesome. And to the last point, I think if rates get to 10% owner occ, the rental demand goes up, especially for single family homes. There's an article I read over the weekend talking about single family demand for rentals is skyrocketing in some cities. I'm like, yeah, no kidding. Go ahead, Dion.
The not good thing, but the positive benefit to landlords is when home buyers can't buy and the rents go up. The I don't want to say quality, but the type of tenant that you have applying, higher credit score, lower debt to income, higher income, like all of those things start happening. So I'm trying to be PC and say it's good to own the assets during a recession.
Yeah, I mean, here's the deal. If rates go to 10%, there is a equation that all single family home occupants think about. Is it cheaper to rent or cheaper to own? If we go to 10%, it will be cheaper to rent in most of the country.
Yeah, agree.
Until rents go up and eats that up. So again, if we race to 10% by, I don't know, May 15th of next year, there'll be a lot more renters, and that's okay. It's mathematically the right decision. Right. So now let's flip the script. So we just did 10%. Let's say, I don't know, by April 15th, tax day, which is the only day it sucks to make a lot of money. At least in my world. Let's say rates on the 30-year mortgage owner occ are 5.5 or 10, right? So down, a little bit more than a point. What do you think happens, Matt?
I think below the median, houses still get bought up pretty quick. I think above the median, I think it's going to be more of a case by case. At 5.5, the problem that we have is that 93% of mortgages are below 5.25.
Exactly.
So if you've got a 2.5 or a 3, you're still not moving. But if you've got a 4.5 or a 4.75 and you need an extra 500 or 600 square feet, you're making a little bit higher a payment, right? So I think that it takes 15 to 20% of people that are on the sidelines. Yeah. I think it brings them into the game on the resale side, which gives us some supply. And I think on the people that are sitting on the sidelines and have been because 7.5 DQ'd them, I think that they're watching it at 6.67. If that hits 5.5 or 5, they're moving. And some of them are even thinking, that means an adjustable rate's going to be 4.25.
Oh yeah.
That puts
Good
me
point.
really back in the game. Now we're a buyer, and that's I think what's going to, kind of create more buoyancy in the market. Why we're not going to see a crash.
Yeah. Dion, what do you think? 5.5.
I think if rates start going down that far, we have enough channels out there talking crash. They're going to be talking about, you don't know where the bottom of the rates are. Don't buy now. They're going to go lower. Wait to buy.
Always go negative then.
Because there's such a big audience of
There is.
give me a reason to not take action so I can feel comfortable with my decision to not take action. So if it's crash, if it's don't catch a falling knife, there'll be that narrative. So the people that were going to buy, but rates outprice them, they're going to become buyers. I think Matt's nailed that 100%, which is going to drive up prices.
Yeah.
So the interest rate goes up 1%, buying power goes down 10%. Like I get the math on that. So the prices might not go down, but the buying power does. Buying power goes up with lower interest rates. So it's going to constantly push the prices up, maybe not higher than where they were priced out at 7%, but as that equilibrium happens, they're just going to keep pushing the price where they can. So I don't expect prices to drop if interest rates do.
No, not at all. I think there's a couple of things you get when you study the consumer for as long as I have 30 plus years. They're predictable. What do I mean by that? As rates skyrocketed, you saw demand destruction, which again, we called. It was an easy call. It's shocking nobody else was pointing this out. And that's because consumers have short-term memories. What they're basically saying is, I used to be able to get a home with a 3% mortgage and I can't now, so I'll wait. Right? That's this. If we keep rates above 6 or heaven forbid above 7 for most of a year, people will forget rates at 3. All they're going to remember is rates were 7, and they'll come flying back to the market. Oh my God, I can get a 6. I can get sub 6. To your point, Matt, I can get a 4 with an arm.
Yeah.
If we can keep the mortgage rate above 6.5 through the summer of next year, the memory will be 7s. And as rates fall in 2024 or 2023, whenever that kind of comes down, it'll just bring the transaction volume will just explode higher. Yeah. Because again, consumers are predictable. What do you think, Dion?
That's why I watch your content. Like the level that you think to process data is much higher than mine, but you filter it down to what matters to the investor.
Awesome. Appreciate that. Matt, what do you think?
I understand everything you said.
Of course you do. And you have a vocabulary that's way better than mine. Melodious or whatever the hell you said earlier?
Melodious. Yes.
Yeah, whatever.
I think that, I think it's really funny that people think that businesses only work in good times. That just shows you've never been through a recession. That's all that shows.
Recessions are awesome if you're prepared.
If you are prepared, imagine walking into your favorite store and everything is on sale. Because
there's no competition.
Yeah, like literally you can, I remember the recession being so bad. I remember negotiating in Home Depot and Lowe's. Wow. Put that in perspective. Like those people don't negotiate. They're big box stores. Oh no, they did.
Yes.
They did. And that's what I'm looking forward to, because it's just like anything else. When Noah built the ark, he was really pumped about the storm coming. He was kind of ready. He was like, I spent 100 years on this boat. I'm ready. So I just think that people need to understand the position that a lot of landlords are in, which is they're operators. They run their business. They understand how their business runs. That's why people watch the channel, is because they want to know how operators are running their businesses. And operator doesn't mean that you self-manage. Operator means that you are the CEO of your company and you are plugging things in where they need to be plugged in. Operator does not mean self-manage. Operator means actually understanding the day-to-day, what occurs, what trends you're seeing, and then being able to pivot or act on those trends. So that's right. Honestly, I feel bad for the people that aren't prepared, but it's not like if they were watching the channel,
not like we haven't tried.
Told them for a year and a half. And don't do what we say. What I did. I refinanced.
This is what we do. Yeah.
Yeah, I
So,
refinanced 24 properties because I knew I could get cheap debt, and I got that cheap debt. And now people that were laughing at me going, I don't know why you'd put yourself through the pain. Now you do.
yeah, you do. Yeah. Matt, where can people find you?
Lumberjack Landlord on YouTube and Instagram, and we're going to be doing a ton of updates. And then really excited this Friday, Uneducated Economist, he interviewed me on his channel. I was super pumped. Yeah, it was nice.
Oh, very cool.
It was really fun.
Dion, what about you?
Right. They can find me right here on YouTube, Dion Talk Financial Freedom.
Awesome. Thanks, guys.
Ciao.